Surana joins us, Chairman and Managing Director of HPCL. Mr. Surana, it's early Diwali for you. Crude prices are down and rupee strengthening.
Yeah, good morning, Nikunj. Yes, the lower crude prices and the better rupee is definitely better not only for the oil marketing companies but also for the consumers, especially in India.
But the fact that this time the decline in crude has happened largely because of demand consideration. The diesel consumption in China has gone down. I was looking at the data which came on last Friday of India's GDP growth that is pointing to a slowdown. So a demand based disruption in the oil market could potentially tell you that world is slowing down and it's not actually good news.
There are some worries on the demand side, especially on the European world, in America, even recent data on India GDP, but India is still a growing story, and the normal perception is that Indian economy will continue to be growing at a good rate, but the same news is not being pursued from the other countries, and that is one of the reasons that there are demand side worries. US-China trade talks or Mexico US worries, that is the demand side story. On the supply side, there are some pressures because of Iran sanctions, because of Venezuela issue, slightly lower production in US recently, but otherwise what you say is correct, that it is more a demand side worry than the supply side worry, which is driving the crude prices down. But the another factor we also need to consider is there is also a lot of trading activities which happen in the crude prices, and that gets driven by the perception and the news of the day. And when there are worries on the crude prices, the traders start unwinding their positions, and which gives the sudden down or sudden ups in the crude prices. So as you rightly said, in last 2 weeks we had a fall of around $10, and directionally it is good for Indian consumers.
Mr. Surana, but just want to get this right, can improvement in retail marketing margins make up for weakness in GRMs in the next quarter?
In fact, in the Indian system, the two works independently. The GRMs are decided based on the crude and cracks, and as far as the domestic prices are concerned, they are based on the day-to-day international prices, product prices. But there are some worries on the GRM front because of the lower cracks, but there is a better news as far as the lower crude prices are concerned, which helps in the price of the fuel which we burn in the refinery. There may be some concerns on the inventory losses if their crude prices are volatile. On the marketing side, the lower prices definitely helps us to manage it better, and to that extent, I won't say that the marketing margins becomes windfall gains if the prices are low, but yes, we have a reasonable margin on the marketing side if the crude prices and the product prices are on the lower side.
Mr. Surana, since we have you with us and as an industry body, one is seeing quite a sharp decline in auto sales numbers, and that's really been grabbing headlines on a monthly basis now, both petrol and diesel as well. Are you witnessing resultant impact on diesel and petrol fuel sales too? Would you say that there is a stark markdown decline there as well?
We didn't see the decline in petroleum products to the extent which has been seen in the auto sector as such. Like even May month, there is a reasonable growth in year-on-year growth as far as petrol is concerned. There were some sluggishness on the diesel, but this is also based on one marked trend that the composition of the vehicles or the diesel vehicles in the total basket of the vehicles is reducing as compared to what it used to be once upon a time, and that may be because of the narrowing price difference between petrol and diesel. So the fall in the vehicle sector is not exactly reflected in the petroleum sector as such, because the passenger sector had been falling, but the commercial sector has been reasonable on that extent as far as diesel or the vehicular commercial vehicle activities are concerned.
Sure. On your refinery throughput as well, Mr. Surana, they've been surging. Talk to us a little bit about that. What kind of efficiencies as well that you're trying to bring in at this point? Also, given what we're seeing on crude prices, are you looking at changing your sourcing mix?
Can you repeat the last line, please?
I said also, given what we've seen on crude prices, are you looking at changing your sourcing mix?
No, each refinery has got a basket of the crude which the refinery can process depending on its configuration and design and the economics. And so is the case with HPCL, that we also have got a variety of the crudes which we have processed in the past, and we continue resourcing the crudes depending on the economics from time to time. As far as the Iran crude is concerned, if that is what your question is, HPCL basket does not contain much of Iran oil. So to that extent, the geopolitical situation does not impact the crude sourcing strategy of HPCL per se substantially. But we had been widening our crude baskets. We had also taken the crude from US. We had also tried the crudes from Far East. So we keep on doing that, and our R&D also, we keep on testing new crudes as well for sourcing and as well as processing. Ultimately, the crude economics works not only based on the crude price, but also based on the product yields which differ from crude to crude, and ultimately net margin which you can realize from a crude barrel. That is what determines which crude is better for you or not. As far as throughputs are concerned, we do keep on doing the things to improve our energy efficiencies, the small debottleneckings, apart from major capacity expansions. As you know that both the refineries are going through a major capacity expansion, but in addition to that we also keep on doing a lot of schemes which brings the marginal improvements in the GRMs as well as energy efficiency. In fact, the last year we clocked the lowest ever energy consumption in our refineries and highest ever crude throughputs. This year, because of BS6, we will be hooking up and revamping the facilities to ensure that we are ready for BS6 rollout, and also these revamps are also along with some of the expansion capacities work, which we will also be trying to do.
Your planned expansion capacity which would be on stream in FY20?
No, actually the Mumbai refinery is going from 7.5 to 9.5 million, and Vizag is going from 8.33 to 15. As far as Mumbai refinery expansion is concerned, that is slated to be completed along with BS6, and so we hope to complete it in this financial year, that is FY 19-20. As far as Vizag is concerned, the BS6 production facilities will be completed during this year. Majority of the expansion work will be going, but that is a big expansion. There are newer units. That actual expansion benefit will be coming in FY 2021 in Vizag. In Mumbai, it should start coming right from the start of financial 2021, because we will be completing that by the end of this financial year.
Which I am sure nobody is attempted to explore, which is that if I look at your refining capacity, both for HPCL and BPCL, large capacities in Mumbai now have become center of the city. When these capacities were created, that time those were suburban areas. Now they are in heart of the city. Considering where pollution norms are, considering that refinery potentially will be emitting out pollutants which may pollute the nearby surroundings, is there any thought in 3 or 5 years that you want to move those capacities outside Bombay? I mean, that's a lot of land, sir, which you're sitting on.
I do not think that the refineries pollution is the main cause of worry as such, because there are norms which are defined for the emissions and the effluent standards, and both HPCL and BPCL meets those standards. In fact, over a period our effluent norms or the emission norms were not revised, even though the capacities were expanded or the new units were brought in. And therefore, first thing, I do not probably agree that refineries are the polluting industries. Of course, all industry do have some emissions, but there are facilities which ensures that the emissions and effluents before they are discharged to the atmosphere are treated. There are other pollutants in the environment which causes much more worry, and therefore the pollution per se from the refinery may not be the main reason for any changes to that effect. Fact remains that whenever a new industry comes, it comes far off from the city, and subsequently over the period, because of the expansions and the concentration of the population, the habitation comes surrounding it. Bombay especially, whenever there is a space that will come, that is a fact of life, and that is true for all the cities, not only in India, and that is true for all the industries. However far you put up the industry, after some time you will find that there is a habitation and the population. In fact, it starts right from the construction time. When you got the workers working, they start making houses nearby. Then you got the ecosystem get developed, all the people who support that system, and so it develops. That is probably the evolution system. What used to happen near the rivers happens near the industries now.
All right, Mr. Khurana, always a pleasure to talk to you, and thank you for joining us now.